Well, over the past several months, Stanley has called for a major turn for the better in employment. We're going to find out tomorrow at 8:30 a.m. if that time has come. Stephen is a Bloomberg best forecaster for employment, and he is the chief economist with Pierpont Securities. He is joining us now from Stamford, Connecticut. Steve, thanks so much for joining us this morning. You say that the labor market hit a turning point. We started to come out of this soft point late last year, but firms still seem hesitant to start hiring immediately. I mean, many shops are on hold. When is the confidence or the significant hiring going to come back?
Yeah, good morning, Deirdre. It just takes time. Not everybody's going to jump on it all at once. I think businesses have learned over the last couple of cycles that you sometimes get false positives where things start to get better and then they fizzle out again, and certainly we saw something along those lines last year. So we're starting to see a major turn in demand. You saw it this week in the ISM surveys with new orders indices going up significantly. But I think firms are going to wait just a little bit, a couple of months maybe, and make sure that's for real before they really start to open the spigots on hiring. So I think you're starting to see a turn in employment, but it's not going to be an all-at-once type of phenomenon.
Stephen, you know that a lot of people are excited about tomorrow's jobs data because of what we heard from yesterday. I know that you don't put a lot of stock in ADP data. Nevertheless, some 19 economists, or at least firms, have raised their estimates, or at least come up with new estimates for tomorrow's jobs data in light of what we heard of ADP. Are they broadly right, given the fact that it was 3 times what the market was looking for? Does it suggest that trends are certainly moving in the right direction, perhaps faster than we initially thought?
That's a very real possibility. I think, it's not just ADP. There are a number of indicators that I look at, whether it be survey results, anecdotal information, even statistical data like the initial claims series have all shown improvement. I think there's something very real going on. Anecdotally, it sounds like businesses are gaining confidence. They were very concerned about about the political environment, the uncertain costs around healthcare reform, the uncertain direction of regulatory policy, the fact that we didn't know what tax rates were going to be for 2011 until just a few weeks ago. And as some of those uncertainties have clarified a little bit, it feels like businesses have definitely, taken an upturn in terms of their attitudes and their confidence, and I think that's going to start to show through in the jobs numbers.
By the same token, though, is it not possible that perhaps people are getting a little over-enthusiastic? You pointed out the ISM data that we got this week. Non-manufacturing looks to be accelerating at a much faster pace than manufacturing, and at least what we've heard over the past several months is that we need to see a rebound in manufacturing, effectively an export-led recovery, which is not what we're getting if services are leading the way.
Yeah, well, I mean, that's why I stuck to my original forecast for payrolls, which is decent. I mean, I have a 165,000 increase, but I don't expect to see a 300 type number tomorrow. I'd be happy if we got it, but I think that would be a little bit too much to ask.
Stephen, when do we see kind of coming out of the nines, if you like, for the headline figure? Is that by the end of the year, or is it before that?
I think maybe by the middle of the year. I think in the spring you're going to start to see a pretty big upturn. If demand is sustained at the kind of growth that we're seeing over the last 2-3 months, I think you'll definitely see payrolls gaining momentum over the course of the year, and we could very easily be seeing 250 or even 300,000 monthly gains in the second half of the year.
Now, what about this idea that maybe when people find a job, they're not finding a job at the same salary that they once had, that they're finding a job that pays them less and is somehow going to crimp what they spend? To what extent are you following those trends? How are they showing up?
Well, there's definitely some truth to that on a micro level. I think, from a macro level, as the labor demand situation improves, the wage situation will improve as well. There are definitely going to be people who are forced to take jobs at lower wages than they were making before. There's a lot of structural change going on in the economy, as is always the case when you go through a recession. What I'm hearing now is that the jobs that are in most demand are highly skilled jobs. And, I think that exacerbates a trend that we've been seeing for several decades now, where there's this widening gap in the labor market between, people who have high-level skills or specialized skills and people on the lower end who tend to be on the lower end of the wage spectrum. So that may be an issue going forward, even as we go into recovery.
In theory, the people who are working are being paid, let's just say, at least at market level, if not better than that, which in theory can contribute to spending. Stephen, thanks so much for being with us this morning. Stephen Stanley joining us there from Pierpont Securities. He is a Bloomberg best.